Hello everyone, here I am with the part 2 of Partnership Basics. Well, in the previous video we had talked about the introduction of the partnership firm and we had studied about various features of a partnership firm and compared it with the features of sole proprietorship and found that how the partnership firm is advantageous. We learned about the Partnership Act and how it describes the partnership firm. We also studied about the features and the partnership deed. Not only that, we learned about the accounting procedure and the very first step, that is the preparation of profit and loss appropriation account. I hope you all remember that. So here I am, Dr. Aarti Mudaliar, Department of Commerce, the Bhopal School of Social Sciences, with the concept of interest on capital. My dear students, as we all know that the partners will contribute capital to the firm. Now, as the firm is a separate entity and it receives the capital or the funds from the owner, therefore, it is the duty of the firm to give a reward on the capital in the form of interest on capital. But interest on capital is levied under two conditions. Number one, if the capital contribution is different by all the partners. That is, the amount contributed by all the partners differ from the profit sharing ratio that has been agreed upon in the partnership deed. I'll give you an example. Suppose the partner's capital is contributed in the form of 5 lakh, 3 lakh and 2 lakh, whereas the profit sharing ratio is equal. In such a case, there is a possibility of including interest on capital clause in the partnership deed. The second condition could lie that the contribution of capital is same, it's equal by all the partners, whereas the profit sharing ratio is different. For example, all the partners have contributed say 1 lakh each, whereas their profit sharing ratio is 5:3:2. In such a condition also, there is a need to include the interest on capital clause in the partnership deed because that will give advantage to the partners in relation to their capital contribution. Well, as we know that this interest on capital is to be appropriated in the profit and loss appropriation account out of the profit earned during the year. And it is shown in the debit side of the profit and loss appropriation account. So only this adjustment we are going to study today. Alright? Well, this video is divided in three major parts. One, the accounting entry for the interest on capital. Second, the computation of interest on capital. And finally, we will be studying about the treatment of interest on capital in the books of accounts. So here we go with the accounting entry. As we all know, this interest on capital is an expense for the firm. Why is it so? Because the firm will be paying this interest on capital to the partners and all the expenses are debited. But because of this, the capital account would increase. Why? Because the partners would gain this amount. And therefore, the first entry, that is for charging interest on capital, the entry is interest on capital account debited to partners' capital account. Now, once this interest has been made due, we have to transfer this expense account into profit and loss appropriation account to close this. So therefore, the very next entry is profit and loss appropriation account debited to interest on capital. Instead of passing these two entries, we can combine these entries and alternatively pass a single entry also for the same transaction. And here we have profit and loss appropriation account debited to partners' capital account. This is a combined entry of the previous two entries that we have studied. My dear students, we have to keep in mind certain important things in mind while the computation of interest on capital. So let us understand how to compute it. Well, for the computation of interest on capital, two things are to be kept in mind. Number one, that it is to be calculated proportionately. What does it mean? Why? Proportionately means that there can be some addition in the capital by the partners. During the year, they may realize that whatever amount of capital they have contributed is not sufficient and they may introduce some additional capital in the firm. So therefore, the capital will change and thus it will require a different kind of calculation for the amount of additions. Sometimes the partners may withdraw the capital from the firm Now, if they are reducing the capital, that means it requires that on the reduced amount, the interest on capital shall be calculated. Therefore, we mean to say that interest which is divided equally over the year, that is equitably distributed over the months in a year, therefore it is necessary to calculate it month-wise on the outstanding amount of capital. Let us learn it with the help of an example. For an easy understanding, my dear students, we have an example in front of us. Let's go through it. A and B started partnership business on April 1st, 2020 with capitals of 2,50,000 and 1,50,000 respectively. On October 1st, 2020, they decided that their capitals should be 2 lakh each. The necessary adjustments in the capitals were made by introducing or withdrawing cash. Interest on capital is to be allowed at the rate of 10% per annum. Calculate interest on capital as on 31st March 2021. Well, this calculation is an year-ending calculation, or you can say once in a year this interest on capital is generally calculated. Therefore, it is necessary to understand that how the capital has changed over the year in this particular year, and accordingly we need to calculate the interest on capital. That is why we call it the proportionate calculation. So let us understand that how we will compute this. For this is a blank template that I have prepared here, wherein A and B's capital, both the partners' interest on capital shall be calculated simultaneously. Now what you need to observe is, in the date column, we must put the date of the change in the capital. Well, as per the question, both the partners have their opening capital as 2,50,000 and 1,50,000. Now this was their opening capital and the change has occurred. That means it was decided on 1st of October that they will convert their capital into 2 lakhs each. That means the change has occurred on 1st of October. So we must write 1st of October for both the partners. Here we have the change in the date. That means this opening capital remained for 6 months. Okay. So we write 6 months over here, and for the rest of the 6 months, it remained 2 lakh only. Alright. So we put 6 months each in both the cases. There. So that means 2,50,000 of A's capital has been contributed for 6 months. It remained 2,50,000 for 6 months, and for the rest of the 6 months it was 2 lakh. Alright. Whereas B's capital was 1,50,000 for 6 months and it changed to 2 lakh for the rest of the 6 months. Therefore, how interest on capital shall be calculated? It has to be calculated at the rate of X%, which is given as 10 over here. So we may change this X% into 10 for the time being. So at the rate of 10%, interest on capital for 6 months only on 2,50,000, we can calculate it separately. 10% for 6 months, that is 6 by 12, right? So this is how the calculation has to be shown for 6 months on A's capital, and on the second part, that is second half of the year, it will be calculated on 6 lakhs at the rate of 10% again. I hope you have understood. Fine, let me find the result of it. Here we have 12,500 for A for the first 6 months, and for the next 6 months it is just 10,000. And here we have the aggregate interest on capital of A as well, which is 22,500. Now let us compute in the same way for B as well. So for the first 6 months it will be calculated on 1,50,000 at the rate of 10%. For 6 months, and just in the same way we will calculate for 2 lakhs for the next 6 months, again at the rate of 10%. As simple as that. Alright, so this is how the calculation is to be done. Now to find the result, I'll give you the answers. And here we have, for the first 6 months, B's interest on capital is 7,500, whereas for the next 6 months again it is 10,000. Why? Because for the next 6 months both the partners had same capital, hence same interest, right? Now the aggregate interest on capital for B is 17,500. Now, do you know where it is to be shown? Of course, both the interest on capital is to be shown to the debit side of the profit and loss appropriation account. And that is how we find the proportionate interest on capital of each of the partners. Now, the next important thing under interest on capital is to be seen that calculate interest always on the opening balance. Alright, so there is a possibility that you may be provided with the capital at the end of the year. Now, how will you find out the opening capital if the closing capital is given to you? Because interest is always to be calculated on the outstanding amount, that is, the amount of capital that you have utilized for the entire year in the firm. So, let us see how will you find out the opening capital if closing capital is given. Well, my dear friends, we have another example with the help of which I'll be able to explain you that how we can derive the opening capital if closing capital is given to us, and thus we can calculate the interest on capital on the opening balance. This is again a blank template through which we can calculate the opening capital, wherein the closing capital is recorded first of all the partners which are given in the question. Then we add back the drawings that were deducted earlier to reach to the closing capital. That is, it is a reverse calculation done to reach the opening capital. Alright, if any additions were made earlier with regards to net profit or maybe additions in the capital, that will be reversed. That means now it will be deducted. Therefore, the distribution of net profit during the year will be deducted, and also if any capital contribution has been done by any of the partner will also be deducted. Therefore, following the reverse calculation method, we can reach to the opening capital very easily, and then we can calculate the interest on it. So let's go through this example and learn it. On 31st March 2021, after the close of the accounts, the capitals of A, B and C stood in the books of the firm at 4 lakh, 3 lakh and 2 lakh respectively. Subsequently, it was discovered that the interest on capital at the rate of 10% per annum has been omitted. The profit for the year amounted to 1,50,000 and the partners' drawings has been 20,000, 15,000 and 10,000 respectively, and you are required to calculate interest on capital. Now the catch here is the capital has been given as on 31st March 2021, which is nothing but the closing capital. So this is how you can easily make out that whether the capital given in the question is the closing capital or not. Now what you need to do is follow this template and simply write the closing capital that has been provided to you, which is 4 lakh, 3 lakh and 2 lakhs. If any drawings has been provided to you, such drawings will be added. So 20,000, 15,000 and 10,000 are the drawings provided. Let us add it. Okay, so this is the capital before the drawings were deducted, and it has already been given in the question that the profit earned during the year has already been distributed. Now we will check in the question whether the profit sharing ratio has been provided or not. Now in this question we cannot see the profit sharing ratio is given, therefore we will assume it to be equal. So that means this net profit of 1,50,000 has been distributed among the partners equally. Since these are 3 partners, so 1,50,000 divided by 3 would give us 50,000 each. So here we deduct 50,000 from each of the partners' capital. There is no addition in the capital, so we may remove it for the time being, or we can just keep it as it is. And let us find the opening capital now after deducting this net profit from this adjusted amount. So I'm just pushing the formula over here, and there we have. Okay, 3,70,000 was the opening capital, and let us copy the same formula in all the cells, and that is going to give us the opening capital of all the partners together. Now we shall see that what is the percentage of interest on capital. In the question it is given, it is 10% per annum, right? So let us calculate 10% of each of this opening capital. So 10% of 3,70,000 will be 37,000. 2,65,000 and its 10% will be 26,500, and 1,60,000 will have 10%, that is 16,000. So this is how we are going to calculate interest on capital on the opening balances and not on closing balances. So follow these simple steps and calculate the correct interest on capital. Now comes the final adjustment with regards to interest on capital, that is treatment. Well, it may be given in the partnership deed itself that interest on capital shall be treated as an appropriation or it shall be treated as a charge. I hope you understand what does it mean. When interest on capital is treated as an appropriation, that means it is simply a distribution of profit. So it is distributed to the extent of the profit arrived at the end of the year. But if it is treated as a charge, that means it is a compulsory deduction whether we have sufficient profit or even if we have suffered loss. In such case also, interest on capital shall be given to the partners. So let us see this also with the help of an example. As I just now said, that interest on capital is treated in two ways. It can be treated as an appropriation or it can be treated as a charge. Now there can be three situations in each of these cases. That is, there is sufficient profit. In such a case, when there is sufficient profit earned in the firm at the end of the year, actual interest on capital can be given. That is, sufficient profits gives way to the actual interest on capital which can be received by the partners. But in case insufficient profits are there, then we need to divide the insufficient profit in the ratio of interest on capital itself. Whereas in case of loss, there shall be no interest on capital. Right? Because in the case of loss, there is no appropriations at all, be it interest on capital or salary or commission. Now, the second case, that is when it is treated as a charge. Again, in the three same situations, we will try to understand that even if sufficient profit is there, actual IOC will be given just as the previous one, that is when it is treated as an appropriation. When there is insufficient profit, even in such situation, you have to give actual interest on capital because it is a charge, even if it results into loss which is to be borne by the partners in their profit sharing ratio. And the third situation is if the firm has suffered a loss, even in such a situation, interest on capital will be provided in the profit and loss appropriation account in the same manner as we have done earlier, even if the loss increases because of the amount of interest on capital. So let us understand it with the help of an example. Well, let us understand it in both the situations. The first one being when it is treated as an appropriation. So here's the question in front of us which says that A, B and C are partners sharing profits in the ratio of 2:2:1. Their capital as on 1st April 2020 was 50,000, 30,000 and 20,000 respectively. Interest on capital is to be allowed at the rate of 10% per annum. Profit for the year ended 31st March is 30,000. Prepare profit and loss appropriation account. So now here we have in the actual scene wherein we are going to prepare profit and loss appropriation account and also simultaneously appropriate profits in the form of interest on capital. So let us first find out in the working note that actual interest on capital is how much, and let us compare it with the profit and ascertain which situation applies, whether the profits are sufficient, insufficient or is there loss. So let us calculate interest on capital first of all. Well, the abbreviation I'm using here for interest on capital is IOC. Now, IOC for A shall be $50,000 is the capital contributed by A and the interest on capital is at the rate of 10%. Okay, and their capital is on the beginning of the year, that is opening capital only. Similarly, we will calculate for B as well. B has contributed 30,000 and we shall calculate 10% on his capital as well, and similarly we will do it for C as well. Who has contributed 20,000. Alright, so we get the interest on capital 5,000, 3,000 and 2,000. Let's find the sum of this interest on capital. It is 10,000 in all. This is the total interest on capital, or you can say this is the total expense on firm. Now, let us compare this with the profit earned. The profit earned during the year is 30,000. That means this is the first situation. That is, profit is sufficient to pay off interest on capital to the partners, and the entire amount of 10,000 can be easily paid out of this profit. So the first thing we are going to write in the profit and loss appropriation account is the net profit, which is transferred from the profit and loss account to the profit and loss appropriation account. So 30,000 is the given amount, and we can write to interest on capital to the debit side, and the respective interest on capital can be written in the inner column, so that it clearly shows that how much of interest has been paid to each of the partner. So 3,000 has been paid to B, whereas C gets 2,000. And we must always write the aggregate amount in the outer column, which is 10,000, which shows the actual expense or the burden on the head of the firm. This is how the presentation of interest on capital can be done. Now let us find that if the total of the credit side is 30,000, that is the net profit, and how much we have given away as interest on capital, 10,000, that means 20,000 still remains. So this 20,000 is the disposable profit which shall be divided among the partners in the profit sharing ratio. Now here the profit sharing ratio is 2:2:1, okay, and this remaining profit shall be transferred to partners capital account, and this is also going to affect partners capital along with the interest on capital. Both will be credited in partners capital account. So just the way we had distributed this interest on capital, in the same manner we are going to show the distribution of this profit over here. So I'm just copying all the partners' name over here, and in rough we can calculate the amount of profit shared by each of the partner. So out of this 20,000, C's share is 1/5. How come? Because 2/5, 2/5 and 1/5 in fraction, that is, this is given in the pure form, 2:2:1 is in pure form. We can convert it into fraction and easily we can calculate. So what I suggest to my students is, we must calculate the smallest portion first. So 20,000 divided by 5 gives us 4,000. This is the least part, that is, make a double of it, that is 8,000, and similarly A also will receive 8,000. So this is how the distribution is done. And here we have 20,000 appropriated among the partners in the ratio of 2:2:1. So this is the case of sufficient profit. I hope you have understood this. Now let us see another example and observe. Now in this situation, what has been given to us, let us read again. The profit sharing ratio is same in the question. Capitals also are same, and the profit earned has reduced. Earlier it was 30,000, now it is only 8,000. So we need not calculate interest on capital again because it is one and the same. Okay, it is total 10,000. So we need to compare interest on capital with the profit. If interest on capital is more and the profit is less, that means it is a situation of insufficient profit. This is a situation where you need to be very, very careful. We cannot give actual interest on capital in this case because we do not have sufficient profits. So how do we work it out? We will first write net profit to the credit side, and here we have our insufficient profit. Now all the partners are waiting for their interest on capital as a reward on their capital. So what do we do now? We have to find out the ratio of interest on capital. So my dear friends, here we have the interest on their capital, which is 5,000, 3,000 and 2,000. I'm just copying it here so that we can find a ratio of it. So what ratio it will be? It will be simply 5:3:2. Okay, that means this 8,000 has to be divided in this IOC ratio or interest on capital ratio to give a rational distribution of profit in the form of interest on capital. Okay, so again in the same way as we did earlier, I'm just copying the same amount, although the distribution will be different now. So let us remove the earlier distribution, which was 10,000, the actual interest on capital. Now, although it will reduce, but it will be in the same ratio, in the same proportion it will be, which they would have earned if there was sufficient profit. So let us divide this 8,000 in the ratio of 5:3:2. So I'm doing the working here itself. 8,000 into 5/10, which is 4,000. So let me write it in the inner column itself. Similarly, let us do it for B. Again, it will be on 8,000, it is 3/10, which is 2,400. And for C, it will be 2/10, okay, which is 1,600. I hope you have understood the calculation. Now I remove this and I will write the aggregate, that is 8,000 only. That means there is no profit left to be distributed to the partners because there was insufficient profit. The entire profit was distributed in the form of interest on capital and also in the ratio of interest on capital itself. Now the last situation under the case of appropriation is loss. Now what happens if the firm has suffered a loss? So here it's the question in front of us. Everything remains same, their capital contribution, their profit and loss ratio, the interest on capital, but the firm has earned a loss of 5,000. So my dear students, if nothing has been given, if the question is silent, then please understand it that it is the appropriation of profits, not losses, right? So if there is a case of loss, no partner will get any interest on capital, rather there will be no appropriation at all. So even there is no need to prepare profit and loss appropriation account, you can simply remove this. The entire loss simply will be divided among the partners in the profit sharing ratio in the profit and loss account itself. There is no requirement to prepare profit and loss appropriation account. Yes, if there are interest on drawings, maybe in that case you will draw up the profit and loss appropriation account and take down this loss and if possible distribute interest on capital. Now we move if the interest on capital is treated as a charge. Well, my dear friends, interest on capital as a charge is very easy to understand because in all the situation, all the three situations, the treatment is going to remain same. That is, the partners shall get actual interest on capital. So let us read the question. Here again, the same profit and loss ratio is there, the same interest on capital rate is there, and the capital contribution is also same. But one change is there, that is, interest on capital is a charge at the rate of 10% per annum. This clause has been included in the partnership deed. If such is the situation, in that case, always give the actual interest on capital to the partners. When net profit is 30,000, this is the sufficient profit case. Why? Because interest on capital is 10,000 and the profit is 30,000. So we have sufficient amount to be distributed as interest on capital. And each of the partner gets their own share of interest on capital. That is, A would get 5,000, B would get 3,000, and similarly C would get 2,000 as he had contributed 20,000. So in all, the total burden on the firm is 10,000, right? And the remaining profit shall be distributed among the partners in their profit sharing ratio, just in the same manner as we had discussed earlier. So I'm not repeating the situation again, right? The second situation is when the profit is less, that is, the net profit given is 8,000 only. Even in such situation, same interest on capital shall be provided. Look at this. The same interest on capital shall be provided. Therefore, I'm just copying the same content and pasting it over here. This will result into a loss of 2,000. Even if there is loss, it will be divided among the partners in the profit sharing ratio. So it will be transferred to partners' capital account in their profit sharing ratio, which is 2:2:1. So therefore, A, B and C will get certain share in this loss as well. Okay, so I'm removing this for the time being so that I can put the correct amounts over here. and let us distribute this loss of 2000 among the partners. All right. Now again, as I said that the smallest share is of C, so 2000 shall be the share of 1/5 shall be given to C first of all. So 1/5 of 2000 is 400, whereas 2/5 will be 800, and again the same amount for A as well. Okay, so a little smart way of calculating things faster. So here we have distributed the loss arising because the interest on capital was treated as a charge. Now this is another situation where the firm has earned a loss. Okay, so even if the firm has suffered loss, here is loss which will be written to the debit side, to net loss. Okay, net loss is transferred to profit and loss appropriation to the debit side, and it is brought to the profit and loss appropriation account just because interest on capital is treated as a charge. So 5000 loss has been brought down here, and now we will treat this interest on capital, that is the same amount will be given even if there is loss. Look at this now. It has resulted into increase in loss. Earlier the loss was only 5000 and now it is 15,000 in all. And this loss of 15,000 now will be distributed among the partners in profit sharing ratio just like this. Okay, so we will distribute 15,000 among the partners again in the profit sharing ratio. So let us distribute 15,000. Now 1/5 of 15,000 is 3,000 and the other partners will get 6,000 each. So that makes 15,000 being distributed among the partners in their profit sharing ratio. So have you seen that when it is treated as a charge, simply actual interest on capital is to be provided to each of the partner even if it results into loss or increase in loss. So I hope, my dear students, that by now you must have learned the accounting entry for the interest on capital, the methods of computation of interest on capital in various cases, that is how it is to be calculated proportionately and it is to be calculated on the opening capital, and also the treatment of interest on capital as an appropriation as well as charge. Thank you so much. We'll meet in the next part of the video, which is on interest on drawings. Till then, keep happy, keep safe.